Alright, so I'm gonna make the video here for you guys, just breaking down the way I'm looking at the market this year. So far, I'm off to a hot start. I'm up a significant amount for the 2 months. I mean, this week uh, I'm up over $15,000 this week alone. Last month was what, 20 something, I think is what I made, 22. So it's working. Like for me, my psychology, like whatever I'm doing right now is working. And basically, what I am doing is following T trades and more so GXT, their models. So there's all the videos on YouTube that you can watch, but I'll just kind of give you my insight on what I've been doing so far. And it all starts with a higher time frame, mainly daily and 4 hour. Okay, that's the primary thing I look at. But recently, like this month, like and last month, I've been on the monthly, as far as like a monthly profile, and I've been using AI to help me with statistics, such as like this month we had the opening gap, the monthly opening gap here with January close, and the open with February, and then I used AI to kind of guide me on the probabilities of if we closed it in, if we closed it back in, just different things I've shared with you guys. And that actually helps a lot as well, just to have the statistics and numbers on your side when trading, a higher time frame like I'm doing. If you're scalping and stuff, intraday, like it's not a big deal. But my goal this year is to hold trades like I am and, just take a part of the larger moves and take the stress out of the everyday, in and out. So far so good. We'll see how the year keeps going. But primarily, what I want to look at, what I want to tell you guys about is daily and H4. That's primarily what I look for. So look for C2 candles. Okay, so a C2 candle, C2 closure, C3 closure, either one of those two. This is a C2 closure. This is a C3 closure. Okay, if you don't know what those are, just watch GXT's videos. I'm not going to go into the whole breakdown of that. That's a very simple idea. But basically, you look for one of those on the daily. Okay, so this one is bearish. So after we have that C3 closure, you take 50% of that candle, and you want to see the high formation of the next day occur around 50%, or lower, and then distribute and continue lower. Same as in this here. You have the C2 closure with this candle. You take 50% and lower, and you want to see the high of the next day form at 50% or lower, and that tells you that we're going to distribute or continue. And then you can see we have C2, C3, C4 today from this closure on Tuesday. Okay. So that's how you get your high time frame bias, all right? If we're looking bullish, this is a C2 closure. This is a C3 closure. Another example would be here, C2 closure, all right? You need context with these. You're not just going to take every C2, C3 closure. You need context. Just like how this is a bearish month. Like we trapped the bulls. Okay, bears took back over, closed below January close, which is the new week opening gap, new month opening gap, and now we're gonna close bearish this month. We're gonna take out this low, okay, and we're gonna have a 5 to 10% down month. All right, so right now we're sitting at like 3. I expect that to be taken out possibly tomorrow, or next week. So 6% there. We could stretch it as far down as like 10 or 11% based on the statistics. So you need context with everything as well. So obviously we had the yearly SMT at the highs, and then we're rolling over. So obviously I'm bearish this month. Anyway, Let's get down to the business. So get your daily bias, okay, whatever it may be. All right. If you look at silver, this candle closure here is a C2 closure, bearish. All right. We took the high, closed back within the high of the next candle, of the previous candle. So we would expect to sell at 50% or lower of that wick. All right. And then today we've sold off. So let's look at silver actually because it was super clean. So H4. So I just primarily daily. I don't spend much time on the daily. It takes 5 seconds. You want to spend the majority of your time on the H4. All right, because you get your daily bias and then you don't even have to look at it again. One more thing before we start. I'm only looking for gaps. All right, I'm only looking for fair value gaps to take a trade from. All right, or a high or a low. Okay, so if you take a high here, you can expect to reverse. A long scenario or a continuation short, you come back into this gap and you take a short. I'm only looking at fair value gaps and highs and lows. Okay. So Wednesday here, all right, we have the daily open. I'm always going to mark the daily open out. All right, 6 p.m. we open, we run higher. So we're already into a bearish profile, daily profile, because we open high. And then what happens up here is SMT, all right? Between this candle here and this candle, we have SMT with gold, all right? So let's look at gold, SMT there, okay? So the 2 a.m. candle makes the high in gold. In silver, we have the 6 a.m. candle that makes the high. So easy to spot SMT. And then once you see the SMT occur on the H4, you get this closure here. So I don't know. Okay, let's look at it like that. Okay, I don't know what's going on with replay. It's been weird since they updated it. But anyway, let me try and do it again. Maybe I can minimize it. Yeah, okay. So you have that closure, okay, on this day at 2 a.m., 6 a.m., all right, and that tells me we closed like that. That's what, a C2 candle closure, and we have SMT between gold, okay? So from here, you can, this is where it gets a little subjective, okay? Because you can use any of the lower time frames. So you see the H4 close, you can go down to the hourly, and you're just looking for a CSD. So H4 and M15 go together, okay? So you look for a CSD. I have the T-Trades indicator, and you can see here, we close that, we have a CSD marked by the red line, and then you can immediately just get short, expecting this high to hold, all right? Or if you're uncomfortable with that, you can wait and just use the fractal model inside of this. So you have this hourly C2 candle closure. What correlates with the hourly is the 5-minute, so you can zoom into that and you look for a CSD and you have it up here, but the entry's down here because the candle just closed. So you can wait for another candle, or you can just put the trade on there. Say you want to go down even lower and get a better entry, or another confirmation, you can sit here on the 1 minute and wait for a 15-minute closure, which is the higher time frame, to give you another entry. So a C2 or a C3 closure on the 15-minute if you want to wait. So we have the 15-minute candle here. All right, nothing there. Okay, C3 closure on the 15-minute. So then you go down to the 1 minute and you have another CSD here, okay? Change the state of delivery and we sold off. I typically don't get too finicky with it. Like if I see the setup on the H4, I'll just get in. You know what I mean? I'll look for a 15-minute CSD and I'm going to get in. I'm not going to wait on these lower time frames to line up perfectly, because sometimes they don't. They'll just take off and you'll get even worse risk to reward. So I'll just get in. If it's on the higher time frame and it looks good, I'll get in. But typically what you want to do is use the 30-minute or the hourly in correlation with the H4. All right, so you have the hourly, we have the H4 closure. Do we see a gap? No. Do we see a high or a low? No. Go down to the 30-minute. Okay, there's a gap. So maybe you can wait until that's hit to go short. But maybe not, because if you go to the 15-minute, it's already filled. And it doesn't come back for it. Okay, so ideally, if you have the H4 closure and the 15-minute CSD, you can go ahead and just get in. All right, we have the retracement here. This is overnight. All right, you have this overnight. Same thing happens. H4 takes the high of the next candle, closes bearish, and then we sell off. It's kind of hard to explain this actually, because I feel like I'm being confusing. But primarily what you want to look at is H4 and 15-minute for the CSD. That's where I've found the most success. You can look into the hourly and the 30-minute to try and like perfect your entry with a fair value gap due to a retest. You know what I mean? Like this fair value gap here, we come up and test it and then we sell out from it. But typically what I'll do is just use the H4, and I'll look for, when I get an H4 SMT, that's when the moves happen. So you see that H4 SMT, and then you can just use any fractalized time frame to look for a CSD, and then you can get in. But my recommendation is to place your stops according to the H4, like an H4 C2 or an H4 C3 candle. Those will be the safest moves. And then this move here was a trade. All right, we have silver and we have gold. Let me just get out of replay. So we opened up here at 6 p.m. on silver on gold, and then we opened up here at 6 p.m. on silver. We bumped into the fair value gap on silver. And same with gold. We bumped into this fair value gap. And there's some SMT here. Okay. So there's SMT here between these two candles. Okay, 10 a.m., 10 a.m. So gold took the high. Once you take the high there and you're in the fair value gap, this is when you can zoom in. All right, you see that, you see the SMT, and then you can get into the lower time frames here and fractalize it. So is there anything on the H1? No, there's no C2, C3 closure. Go to the 30-minute, you have a C2 closure here. All right, then you have another C2 closure here, and then you distribute. Okay. So what you look for is, like, you see this closure, okay, then immediately drop down to the 3-minute. 30-minute and the 3-minute correlate. And then you look for the CSD, okay? So you have the closure, you have the CSD, that's a C2 candle. You have the red CSD. I have both. I'm neutral here, so it's going to show bullish and bearish. And then this would be, an opportunity to get a high risk reward trade here, which I don't really care about with this strategy. Okay, you get another C2 closure, and it marks it there with the red. Okay, so once we close here, you can anticipate that to close as a C2 closure. All right, close there, it marks it. So this is an early entry because the the 30-minute candle is not closed. But you can anticipate that to hold, okay, because we're in our area of interest, higher time frames aligned, H4 is aligned, daily's aligned, and then you can take your trade based on that, okay? So that's really it. I mean, it's simple. It's super simple. I mean, you use the higher time frame to give your targets, your bias, and then the entries really don't matter, because if you're aligned higher time frame, you're going to be on the right side of the trade, and your stop loss, your tight entries really don't matter. Your all the other bullshit doesn't matter. Like you look for the higher time frame correlation, SMT, and you just get in. It's really as simple as that. Once you have, your candles aligned, you get in on the higher time frame, and if you want to get picky and go lower time frame, you can use a lot of extra brain power and time and get a really tight entry, or get stopped out sometimes, or you can just use the H4 stop and then manage it that way. But again, the only time you're going to trade is in a fair value gap or after you've taken a higher low. So for instance, here, this is a reversal candle, and you can trade the reversal candle even though we printed a bullish candle the day before, because when you take that high, you can expect reversal, okay, if we take that high and don't continue. So we took that high, okay, we opened high here. This is the daily open, right here, daily open. We open high, take previous day high. We form a nice C2 candle closure on the H4. Let's see if there's SMT relative to that. I don't think there is, but there is. Okay. Another good example here. This was from Monday, Tuesday. So 2 a.m. makes the high on ES. 2 a.m. makes the high on NQ. Okay, there's actually no SMT there, sorry. But you do have SMT in regards to this high here. All right, you have that high on NQ, we didn't take it. On ES, we did take it. Okay. And then if you also go to YM, there's SMT there as well. So H4 closure there at 2 a.m. So 6 a.m. opens, you can expect the candle to continue and distribute lower. Okay. Because we're above the high, forming a daily profile of reversal. So you can go right into here, and we profile that H4 candle, all right? H4 closes there. We have CSD, so we know it's looking good, okay? The only thing that we don't really have is an SMT on the H4. So what you could do there is go into the hourly. Okay, we have the 2 a.m. high, and we have a 3 a.m. high. So we have an hourly SMT, which works as well, okay? All right, so that looks like here, C1, this is going to be a C3 closure here at 3 a.m. on NQ, and then we have a C3, C2 closure at 3 a.m. Right, C2 candle closure at 3 a.m. We have the high of the day at 3 a.m. On ES, we have the high of the day at 2 a.m. on NQ. So you have your hourly SMT, and then from here you can go lower, all right? You have that 3 a.m. closure. So once 4 a.m. opens up, okay, you have 4 a.m. here, opens high, you can take your short, and then expect continuation lower. Same thing on NQ. Okay. We open high here at 4 a.m. and you get another entry up here at 8. And it just repeats. I mean, it's the same patterns over and over. But yeah, I hope this helps. I know it's a little confusing. I mean, honestly, my opinion is to just go watch GXT's videos and T-Trades if you don't understand fractal model. and it's good stuff. I mean, it works for me. I like to just put the orders on and let it do its thing. I've been getting really large moves, um, but just stick to the daily for your bias, and then the H4, and don't really go below that until you see something that you like on the daily and the H4. So if the daily aligns with the H4, then you want to look for the lower time frame to align as well. And by align, I mean, you know, once we close here on this day, Tuesday, you're going to look for shorts the next day. So on the H4, you're not going to look for longs. You know what I mean? So when we have this closure here on Tuesday, you go to the H4, you know, the next day opens up. We have that nice bearish close. And then we open high. We have SMT on the high. We're going to look for shorts. Okay? It's all about the daily profile and the H4 profile. Okay? Daily profile, you want to open high for shorts, open low for longs. H4 profile, same thing. Same thing. Okay? So, yeah, hopefully this helps you. Let me know if you guys have any questions or any specific thing you want me to like go over again. I know this was not the best video, but there are several videos out there that are much better quality than this that can give you much more insight from the people who actually taught this strategy. So give that a watch. But yeah, I'm going to post this up for you guys.